So, IREN Limited. Is this company pulling off a brilliant dual play, right at the sweet spot of Bitcoin and AI?
Or is it maybe stretching itself a bit thin, gambling on two, let's face it, incredibly volatile industries?
Exactly. That's the big question we're digging into today. We'll explore the whole range of possibilities for IREN. Welcome to the deep dive. This is where we take your sources, kind of peel back the layers, and really try to pull out the most important nuggets for you. Today, we're tackling a pretty detailed research report on IREN Limited. They're headquartered in Australia, but they trade right here on the NASDAQ Global Select Market, ticker IREN.
Right. And our mission for you today is to really unpack IREN's operations, its financials, its strategy.
Yeah.
We want to help you understand where this company sits because it's a pretty unique spot, right, between digital money and AI.
Right.
And just for context, all the data we're using, it's anchored around July 1st, 2025. That's when IREN's stock closed at $15.95 a share.
Got it. Okay, let's jump right in then with Chapter 1, Business Analysis. So this company, it started with Bitcoin mining, but it's really not just a miner anymore, is it? The report makes a big deal about how they've evolved.
Exactly. Yeah, Bitcoin mining was definitely the foundation, but what they've built is a vertically integrated model. The core idea really is they develop, they own, and they operate these next-gen data centers. And the goal is to monetize low-cost renewable energy through what they call power-dense computing.
Ah, okay. So the core skill isn't just mining Bitcoin or running AI servers. It's actually building and powering these huge data centers efficiently.
That's precisely where the synergy comes in. They've got two main segments. First, there's Bitcoin mining. Still foundational, brings in revenue. They use those specialized computers, ASICs, to secure the Bitcoin network, and they earn the block rewards and transaction fees.
Right.
But here's the crucial part. They immediately liquidate all the Bitcoin they mine every day
Right.
into US dollars.
So they're not speculating on the price.
Nope, they're avoiding that volatility. It turns a potentially wild asset into predictable cash flow. Good for operations, good for reinvestment. It really de-risks their balance sheet,
Okay, that's interesting. And the second segment?
That's AI cloud services, which they call IREN Cloud. They saw this, explosion in AI demand, right? And they realized their data centers' high power density, efficient cooling are perfect for energy-hungry GPUs.
The NVIDIA chips.
Exactly. They provide access to NVIDIA H100 and H200 GPU clusters. Customers, including some big US AI cloud providers, use these for AI model training inference tasks. IREN basically offers them white-labeled compute, raw power.
White-labeled compute. Okay.
Yeah.
And what kind of scale are we talking about here? Is it significant?
Oh, yeah, it's significant. As of the end of June 2025, they hit 50 exahashes per second for Bitcoin mining.
50, what is that even?
It's 1 quintillion calculations per second, a massive number.
Wow, okay.
And for AI, they're offering access to nearly 1,900 of those NVIDIA H100 and H200 GPUs. So, yeah, real scale.
And they must have grown incredibly fast to get there.
Yeah. Rapid and, importantly, organic growth. In just 30 months, they scaled operations about 50-fold. 50 times.
Incredible.
It made them one of the world's largest publicly listed Bitcoin miners. Their physical footprint is pretty big, too. 4 large data centers in North America, 3 in BC, Canada, and then their flagship, Childress, down in Texas. That one alone has 750 megawatts of power capacity.
750 megawatts.
And they control a development pipeline of over 3,000 megawatts of secured power and land for future growth. Huge potential there.
So with all that, what's their unique selling proposition? What makes them stand out?
I'd say their primary value prop is providing high-performance, power-dense computing infrastructure that's powered by 100% renewable energy.
Okay, the green angle.
Well, yes, that addresses environmental concerns, ESG investors like that, but maybe more importantly, it creates a durable cost advantage.
How so?
By setting up shop in places with abundant low-cost renewables, mostly hydro, they achieve structurally lower operating costs. Electricity is the biggest expense by far in this game.
Right.
So getting power for, say, 3.3 cents per kilowatt hour, like they do at Childress, that's the key to their high hardware profit margins. It's a structural advantage.
That low power cost sounds like a huge moat. Okay, let's unpack the industry landscape a little. What's happening in Bitcoin mining right now? What's the climate?
Okay, yeah, good question. The Bitcoin mining scene in 2025, it's really about institutionalization and efficiency. That's the watchword. Remember the halving? In April 2024, it cut the block rewards in half. Suddenly, the cost to mine a Bitcoin effectively doubled overnight for everyone.
Right, I remember that. Squeeze margins.
Exactly. So now only the most efficient operators can really thrive. That means the ones with the absolute lowest power costs and the newest, most energy-efficient hardware. We measure that in joules per terahash, or JTH. Lower is better.
And the less efficient guys.
They're getting squeezed out. It's becoming a game of scale and efficiency.
Okay. And what about the AI side? What does that landscape look like?
Okay, now here's where it gets really interesting, I think. AI compute demand. It's just, it's growing exponentially, way faster than supply.
We hear about that a lot. The bottleneck.
It is. These complex, large language models, LLMs, they create bottlenecks everywhere.
Yeah. Electricity
Supply, specialized data center capacity. There's a particular shortage of the high-density, liquid-cooled facilities you need for the next-gen GPUs, like NVIDIA's Blackwell series.
Liquid cooling. Yeah, that's advanced stuff.
It is. And this shortage creates a massive growth opportunity for infrastructure providers who can actually build this stuff, like IREN.
Makes sense. So who are their main competitors then? They're playing in two big leagues.
Right. In Bitcoin mining, it's the other big North American public miners. Think Marathon Digital, RRA, Riot Platforms, Riot, CleanSpark, CLSK.
How does IREN stack up?
Well, the report shows IREN is very competitive on scale, but crucially, they lead their larger peers in fleet efficiency. Their 15 JTH beats Mara's 20, or Riot's 21.1. That efficiency edge is huge post-halving.
And that AI pivot distinguishes them.
Definitely. While Riot seems hesitant and Marathon is mostly focused on just mining scale, IREN's made this aggressive move into AI. Now, in AI cloud services, sure, they face the giants AWS, Google Cloud, Azure, but IREN isn't trying to beat them. They're positioning themselves as a provider of the scarce raw infrastructure that even those hyperscalers need.
Okay, so they're selling shovels in the AI gold rush, kind of.
In a way, yeah. Their real competitive battleground is actually in infrastructure development, securing that land and those crucial power contracts before anyone else.
What about regulation? That seems like a potential headache, especially with operations in different countries.
It's definitely something to watch. And yeah, this raises an important question about their geographic strategy. Their diversification is key because the environments are different. Texas, where Childress is, pretty pro-growth. They passed Senate Bill 1929 requiring registration for large crypto facilities, but it's more about transparency, not restriction. Texas even set up a strategic Bitcoin reserve in June 2025. Very supportive.
But Canada's is different.
Yeah, British Columbia has become more restrictive. They put policies in place limiting new grid connections for crypto miners, and the courts upheld those in March 2025. So that divergence really anchors IREN's future growth plans firmly in Texas, it seems.
And barriers to entry. How hard is it for someone new to jump into these businesses? Sounds tough.
Oh, incredibly high barriers, yeah. For Bitcoin mining, just securing those multi-megawatt power contracts is a huge challenge. Then there's the massive capital needed for the hardware.
And AI data centers, even harder.
Arguably, yes. The power needs are staggering. You're looking at years-long queues just to get connected to the grid, complex permitting. And then there's the advanced liquid cooling tech needed for the latest chips.
So IREN having existing sites and secured power is a big deal.
It's a powerful moat, yeah. Their existing portfolio is a major advantage against newcomers.
Okay, so let's recap their core competitive advantages.
Wow.
We've got low-cost power, that vertical integration. What else?
Well, besides that low-cost power, which again leads to that impressive $41,000 all-in cash costs per Bitcoin they hit in Q3, fiscal 25, they're actively building a brand, a sustainable green energy computing company.
The ESG appeal.
Right. Appeals to ESG investors, but also corporate AI clients who have their own sustainability goals. Then there are economies of scale from operating over 660 millisW already, but maybe their most valuable, unique asset. It's that portfolio of secured power and land. Over 3,000 milliW of capacity, 2,000 acres. That's the raw material for their future growth. That's gold dust in this industry.
And a team running the show.
Can't forget them. The management team has proven they can execute, delivering huge projects globally before IREN, and scaling IREN itself incredibly fast. That execution capability is key.
Okay, that sets the stage nicely. Let's move on to Chapter 2, Management Evaluation. You mentioned the team. Tell us more about the leadership. Who's in charge?
Yeah, this is crucial, right? The company's led by its co-founders, Daniel and Will Roberts. They serve as co-CEOs, and their backgrounds are really telling. They come from places like Macquarie Bank, Palisade Investment Partners. deep experience in institutional-grade infrastructure development.
Ah, so they're infrastructure guys first, crypto guys second?
That's the DNA, exactly. It's an infrastructure-first mindset. And you see it validating their track record scaling mining capacity 50x in 30 months. That's about project execution.
How do they handle tough times, like that Bitcoin crash in late 2022 you mentioned? That must have tested them.
It certainly did. They had issues with equipment financing back then, like many miners. But instead of, folding or taking on bad debt, they were pragmatic. They restructured agreements with Bitmain, their hardware supplier. They used prepayments they'd already made to get new, more efficient miners, crucially without any additional cash outlay.
Smart move.
Very. They came out of that crisis with their balance sheet clean, no outstanding debt. It showed real discipline, focus on the balance sheet. That's good leadership in a volatile space.
And transparency. How open are they with investors?
They seem to make a point of it. They publicly commit to high governance standards. They put out detailed operational updates every month, Bitcoin mined, hash rate, even revenue breakdowns for both Bitcoin and AI segments.
Monthly updates, that's pretty frequent.
Yeah, plus quarterly earnings calls with Q&A. The research didn't flag any major controversies around transparency. Seems pretty open.
Okay, let's talk capital allocation. Huge growth needs huge money. What's their strategy?
Well, the strategy has clearly been aggressive organic growth, reinvesting heavily. But the most significant decision lately, that was the strategic pause on Bitcoin mining expansion once they hit that 50 EHs milestone.
The pause. Why?
To pivot. They're explicitly reallocating resources, focus, and capital towards the AI data center business. They clearly see that as the higher return opportunity right now.
And how are they funding that AI build-out?
A big chunk comes from that $550 million convertible senior notes offering they did in June 2025. It was upsized, which shows strong demand. Carries a 3.5% coupon due 2029.
Convertible notes, so potentially dilutive down the road.
Potentially, yes, but it gives them significant capital now at a reasonable coupon rate. This debt is earmarked for major AI projects like Horizon 1 at Childress and another big one called the Sweetwater Project. They also brought in a dedicated chief capital officer, Anthony Lewis, to spearhead these more sophisticated financing efforts. Shows they're serious about funding this growth.
Makes sense. What about returning capital to shareholders? Dividends, buybacks, anything? Nope, not right now. IREN is squarely in high growth mode. They do not pay a dividend, and they don't have a share buyback program active.
So every dollar goes back into the business.
Pretty much. Yeah. The focus is 100% on scaling and capturing market share in both Bitcoin mining efficiency and AI infrastructure.
Okay, so evaluating their return on invested capital, ROIC, must be tricky then, given the heavy spending and recent profitability. You mentioned negative historical numbers.
Yeah, this raises an important point. Looking at historical ROIC can be really misleading here. Trailing 12-month figures might show negative numbers, like negative 1% or so as of March 2025.
Because of past losses and CapEx.
Exactly. Big build-out phases mean huge capital expenditures and often net losses initially. The more relevant question, I think, is about the potential future ROIC on the new capital they're deploying, especially into AI.
And what does that look like?
Well, those hardware profit margins for AI we talked about exceeding 95% in recent months. That suggests the potential returns on these new AI investments could be extremely high. That's what the bulls are betting on. Got it. Okay, let's transition to the numbers themselves. Chapter 3, financial analysis. First off, market cap. Where does IREN stand as of our snapshot date?
Right. As of July 1st, 2025, with the share price at $15.95 and about 241.87 million shares out, IREN's market capitalization was roughly $3.86 billion.
Okay, $3.86 billion. And revenue growth. You said it was explosive.
Explosive is the right word. They're a young public company, so no 5-year history, but since their IPO, wow. Fiscal year 22, they did $59 million. FY23, $75.5 million. FY24 jumped to $187.2 million, mostly Bitcoin, but AI started showing up with $3.1 million.
And recently,
get this, just Q3 of fiscal 25 alone was $144.8 million in revenue. $141.2 million from Bitcoin, $3.6 million from AI.
Just one quarter almost matched the entire previous year.
Yep, that's hypergrowth. Shows they're executing on scaling up operations successfully.
What about profit margins? We know the hardware profit is high, but what about the actual bottom line, the GAAP net income?
Right, that's the fascinating contrast. May 2025, Bitcoin hardware profit margin, 74%, AI cloud services, an incredible 98%, super high.
But that's before corporate costs, depreciation, etc.
Exactly. So historically, after all those things, they operated at a net loss. But the crucial development, the inflection point, happened recently. They've turned profitable on a GAAP basis.
When did that happen?
FY 2024 was still a net loss of $29 million. But then, Q2 of fiscal 25, they posted a net profit of $18.9 million, and Q3 fiscal 25 was even better, net profit of $24.2 million.
So, 2 consecutive profitable quarters.
Yes. It strongly suggests they've finally reached a scale where the operational profitability is enough to cover all the corporate overhead and other expenses. That's a big milestone.
But are they generating free cash flow yet? Or is all that profit and more going straight back into building new data centers?
Still firmly in the investment phase, free cash flow has been persistently negative, and you'd expect that. They're just investing so heavily in capital expenditures. CapEx consumes way more cash than their operations are generating right now.
Could you give us some numbers?
Sure. For the trailing 12 months ending April 2024, they had about $81 million in cash from operations, but investing activities used almost $1 billion, negative $991 million. So levered free cash flow was deep in the red, around negative $714 million.
Wow. Okay. So definitely still building.
Absolutely. And that pattern is expected to continue with the aggressive AI expansion. Positive free cash flow is likely still a ways off.
What about earnings consistency? Obviously, it's early days given they just turned profitable.
Very early days. Founded 2018, public late 2021. There's just not a long history there. Earnings were volatile and negative until these last 2 quarters. The trend, though, was narrowing losses per share leading up to this. So Q2 and Q3 FY25 look like the start of potential positive earnings consistency, but it's not proven over a cycle yet.
Okay. How strong is the balance sheet then, especially with all this spending and the recent debt offering? You mentioned low debt earlier.
Yeah, they maintain a remarkably strong, I'd even say conservative balance sheet despite the growth. As of June 30, 2024, their debt-to-equity ratio was super low, 0.09, almost no debt relative to equity.
And even after the $550 million convertible note?
Even after that, their leverage profile remains pretty conservative for an infrastructure company in build-out mode, and their liquidity, exceptionally strong. Current ratio was 6.35 as of June 30, 2024. That means they had over 6 times the liquid assets needed to cover their short-term obligations.
6 times. That's a huge cushion.
It is. It's what you might call a fortress balance sheet. Gives them flexibility and resilience, which is crucial in these volatile markets.
Okay, so the balance sheet is strong, but earnings are just emerging. How do we value them? Can we use traditional metrics like PE?
Not really helpful yet. Because of those past net losses, the price to earnings, or PE ratio, is either negative or just not meaningful. Doesn't tell you much.
What about price to sales?
Price to sales PS is around 7.7 based on trailing 12 months revenue. But, whether 7.7 is high or low, it entirely depends on if they can convert those growing sales into sustained growing profits in the future. It's forward-looking.
So back to that intrinsic valuation idea, the discounted cash flow model.
Exactly. To try and cut through the noise of current metrics, a DCF model attempts to value the business based on its expected future cash flows. Now, for IREN, building such a model involves a lot of assumptions, making it tricky. But an educational DCF model, the kind used in the report, suggests a very wide estimated intrinsic value range, something like $10 to $25 per share.
$10 to $25, that's a huge range.
It is. And that wide range really reflects the high degree of uncertainty here. You have to make big assumptions about future Bitcoin prices, how fast the AI market will really grow, IREN's execution capabilities, future power costs, lots of variables.
And the discount rate used would be high.
Definitely. To account for all that risk and volatility, you'd use a high discount rate in the DCF, maybe somewhere in the 12% to 15% range, or even higher depending on your risk tolerance.
Okay, that wide range is telling.
Yeah.
Let's shift gears now and look at how the market perceives IREN. This brings us to Chapter 4, Market Sentiment. What's the general feeling on Wall Street? Are analysts bullish or bearish?
Overwhelmingly positive, actually. The consensus rating among the analysts covering IREN, maybe 8 to 12 of them, is consistently a strong buy or buy.
Okay, strong buy.
Yeah. And the average 12-month price target sits somewhere between $18 and $20.30, so quite a bit above the $15.95 price we're anchored to.
Is there much dispersion in those targets?
Oh, yes. The forecasts range quite a bit. The low target might be around $12, but the high goes all the way up to $33. That spread really reflects those differing levels of optimism about pulling off this dual Bitcoin AI strategy.
Which firms are positive?
We see names like H.C. Wainwright, Roth MKM, Bernstein, even J.P. Morgan have reiterated positive stances recently, so broad institutional support there.
What about the general news flow? What kinds of headlines are we seeing?
Also overwhelmingly positive lately. Lots of coverage around their record monthly revenues, that successful $550 million convertible note offering, which the market took as a strong signal of institutional confidence and hitting the 50 EH's mining milestone.
And the AI pivot gets attention.
Huge attention. Headlines often frame the AI angle as the key value driver now. Things like, crypto miner IREN surges as AI pivot delivers profit haul, that kind of narrative.
Okay, positive analysts, positive news. But what about short interest? Are people actively betting against the stock?
Yes, and this is interesting. There's actually significant short interest here. As of mid-June 2025, about 12.59% of the public float was shorted.
12.5%. That's quite high.
It is. Represents almost 29 million shares. It tells you there's a meaningful group of market participants who are betting the price will go down.
Why would they do that, given the positive sentiment elsewhere?
Likely concerns about valuation maybe getting ahead of itself, the inherent volatility of Bitcoin still driving a lot of revenue, and the execution risks involved in scaling the AI business so quickly against giant competitors.
Has short interest been increasing?
It actually increased quite a bit, nearly 20% in the month leading up to our data point. So the bears were getting more active recently. It's a point of tension in the market narrative.
How is the stock price, technically, trading relative to its moving averages?
Technically, it looks very strong. The $15.95 price is trading substantially above its 50-day simple moving average, which was down around $8.04.
Way above.
Yeah, and it's also well above its longer-term 200-day moving average. From a technical perspective, that's a classic bullish signal. Indicates strong short to medium-term momentum and suggests a sustained uptrend was in place.
Okay, bullish technicals, but significant short interest. Interesting mix. Now for Chapter 5, ownership structure. Who actually owns IREN stock?
Well, institutional investors definitely have significant interest. The report mentions 219 institutions filed ownership forms. And it's an interesting mix. You see specialized digital asset funds, but also large traditional banks and some very sophisticated quantitative trading firms involved.
Who are the top holders? Any familiar names?
Top holders include names like BitCapital GmbH, which sounds like a specialized fund, but also Group 1 Trading and Citadel Advisors. Those are major trading operations.
Citadel, okay. Any notable trends among these big holders recently, buying or selling?
This part is fascinating, actually. Many of the top holders dramatically increased their positions in the most recent quarter.
Increased, like Citadel.
Yeah. Citadel boosted its holdings by a whopping 417%. Another one, Wale Trading, increased theirs by over 1,000%.
Wow, 1,000%.
Yeah, that kind of aggressive accumulation by sophisticated players like Citadel and Wale is often seen as a strong bullish signal. They're putting serious money behind the thesis.
What about insiders? Management and directors, how much do they own?
Insider ownership is around 6.43%. That's a meaningful stake. Enough to suggest their interests are pretty well aligned with shareholders. They have skin in the game.
Is the ownership concentrated overall?
Yes, it's relatively concentrated among those top institutional holders. On the one hand, that shows strong conviction from those who own it.
But on the other?
On the other hand, concentration can lead to increased volatility if one or two large holders decide to sell a big chunk. And the presence of those quantitative trading firms like Citadel and Group 1 also suggests active trading, which can contribute to price swings day to day.
Okay, good overview of who owns it. Let's move to Chapter 6, risk assessment. How do we frame the overall risk picture here?
I think a SWOT analysis is a good way to structure it. Strengths, weaknesses, opportunities, and threats. Helps organize the internal and external factors.
Makes sense. Let's start with the strengths. What are IREN's core internal advantages?
Okay, strengths. Primary ones are internal, structural. First, being a low-cost, vertically integrated operator, mainly thanks to that cheap renewable energy. Second, having an expert management team with that proven infrastructure execution track record. Third, that fortress-like balance sheet with minimal debt gives them resilience. And fourth, the dual-engine growth strategy itself, leveraging their core assets across both Bitcoin and AI. That diversification is seen as a strength by bulls.
Okay. And the weaknesses. What are the internal challenges or shortcomings?
Weaknesses. I'd say the most significant internal one is their nascent and still somewhat unproven profitability. Yes, they just hit positive net income, but it's only been 2 quarters after a history of losses. They need to sustain it.
Okay, profitability track record is short. What else?
They also have a relatively limited track record, specifically in the AI infrastructure space. It's new for them and it's hyper competitive. And finally, the business model is just inherently highly capital intensive. It requires continuous, massive investment to keep growing and stay competitive. That's a constant pressure.
All right, now for the external factors. What opportunities lie ahead for IREN?
Huge opportunities. The most obvious is capitalizing on that explosive demand for AI compute power. There's a documented, real shortage of the exact kind of high-density data center capacity they're building. They're positioned perfectly for that wave.
Right, the AI tailwind.
Definitely. And don't forget Bitcoin. As a large, efficient miner, any future Bitcoin price appreciation would still provide a massive tailwind to their revenue and profits.
Any longer-term opportunities?
Potentially. That huge portfolio of secured power and land they have, longer term, they could maybe monetize that for other energy-intensive applications if needed. Things like green hydrogen production are sometimes mentioned in that context. Lots of possibilities with cheap renewable power.
Okay, now for the flip side, the external threats. What could derail this story?
The biggest, most immediate threat is still the extreme volatility of the Bitcoin price. It forms the bulk of their revenue right now, even with the AI growth. A major Bitcoin downturn would still hurt them significantly.
Competition.
Intense competition, yes, from other big, efficient Bitcoin miners and from the established cloud giants in the AI space. They're fighting battles on two fronts.
And regulation. Geopolitics.
Always a threat. Regulatory and geopolitical risk is constant. You could see unfavorable regulations on energy use for miners, or maybe tariffs on imported hardware like ASICs or GPUs that could really impact their costs or expansion plans.
How do bigger macroeconomic factors play into these threats, like interest rates, inflation?
They definitely play a role. Persistently high interest rates make funding those massive expansion projects more expensive. It increases their cost of capital.
And inflation.
Inflation can hit them directly by increasing the cost of construction materials, labor for building data centers, potentially squeezing those future margins if they can't pass costs on. And this raises that specific geopolitical risk question we touched on earlier. Imagine a hypothetical scenario. What if the U.S. imposes significant new tariffs in 2025 on hardware imported from China?
Like ASICs and servo parts.
Exactly. Most ASICs, many server components, come from China or that region. Tariffs like that would directly inflate IREN's capital expenditures. It could force them to slow down expansion or accept lower returns on investment.
Has management acknowledged that risk?
Yes, the report indicates management is aware of this and is actively monitoring and managing supply chain and geopolitical risks, but it's a significant external threat to keep in mind.
Okay, that paints a pretty clear risk picture. And that brings us neatly to Chapter 7, Conclusion. Let's try to synthesize all this. First, summarize the bullish case for IREN. Why buy this stock?
All right, the bull case. It's really not just a Bitcoin play anymore. The thesis centers on IREN being a kind of best-in-class, vertically integrated infrastructure operator, one that's strategically positioned to ride two powerful tech waves: Bitcoin efficiency and AI infrastructure demand. It rests on that expert management team with their proven execution skills, the fortress balance sheet providing stability, and that core competitive advantage in low-cost renewable power. Bulls see the AI pivot not as a distraction, but as a brilliant logical evolution. It diversifies revenue, taps into explosive growth, and reduces that long-term dependence on Bitcoin's price swings, and that recent flip to positive net income. Bulls see it as proof the model is scaling successfully and reaching financial maturity.
Okay, that's the bull case. Now, what's the bearish perspective? Why might someone be hesitant or bet against IREN?
The bear case views IREN fundamentally as a speculative, high-risk investment, one that's dangerously exposed to volatile and extremely competitive markets. Bears would argue the valuation looks stretched, that the market has already priced in future success that is far from guaranteed. That recent profitability, they'd call it nascent, unproven through a full market cycle or a potential Bitcoin downturn.
And the AI pivot.
Bears see the AI pivot, while appealing on paper, as carrying immense execution risk. They're going up against deeply entrenched, massively funded competitors. Plus, their main cash cow, Bitcoin mining, remains inextricably linked to Bitcoin's price volatility. And finally, those external threats, regulatory shifts, potential tariffs, macroeconomic headwinds, any of those could realistically derail their ambitious growth plans. So from a bear perspective, it's a high-risk proposition.
So connecting back to valuation, where does the current stock price stand relative to that wide intrinsic value range you mentioned earlier?
Right, if we connect this to the bigger picture, that educational DCF model gave us a wide range, maybe $10 to $25 per share. As of our snapshot date, July 1st, 2025, IREN's share price was $15.95. So it's trading pretty much right in the middle of that wide estimated range.
What does that tell us?
It suggests the market is trying to balance things out. It recognizes the substantial opportunities, especially in AI, but it's also factoring in the significant risks and uncertainties we've discussed. The price reflects that tension.
So, pulling it all together, what does this mean for you, our listener, trying to make sense of IREN? What's the takeaway?
I think the takeaway is that the investment case for IREN is definitely a high-risk, high-reward proposition. It really hinges on management's ability to continue executing flawlessly on a very ambitious, visionary strategy. If they keep executing with discipline, successfully scaling that high-margin AI business while managing the ups and downs of Bitcoin, then maybe the current price could look attractive in hindsight. However, if market volatility gets extreme, if competition proves too fierce, or if regulation or tariffs throw a wrench in their plans, well, the downside could also be considerable. It's not a stock for the faint of heart.
That was a truly deep dive into IREN Limited, a really fascinating company sitting right at that intersection of Bitcoin and AI.
So what stands out to you listening to this? Maybe consider how the future of energy infrastructure itself, securing low-cost renewable power, might be the real deciding factor for winners and losers in these emerging tech sectors.
Yeah, and does diversifying across two volatile markets actually reduce risk? Or does it maybe amplify it if both go sour at once? Something to think about. Now, this analysis was produced by an AI system, drawing from that research report by Stock Analytics AI, and it's purely for educational purposes. We found this particularly interesting report from Stock Analytics AI. As you know, they also encourage you to like and subscribe to their YouTube channel.
Oh yeah, what do they offer?
Well, members, for a pretty small monthly fee, can add stock suggestions for future videos right in the comments, and they get priority for deep dives on those tickers.
Priority access, nice.
Yeah, and they're apparently covering all the S&P 500 stocks over the coming months, so members get that exclusive priority access. And if you just want a one-off deep dive on a specific stock you're interested in, you can drop them a super thanks on their channel.
Good to know. But remember, this analysis, while based on their report, was generated by an AI for educational discussion. It should absolutely not be considered financial advice.
Definitely not. Please, always conduct your own thorough research. Dig into the source materials yourself, or consult with a qualified financial advisor before making any investment decisions.